Good morning, everybody. It is December 3rd, and we're going to go over the COT data that came out yesterday after the market close. Are you trading blind? Are you throwing your money away in losses and commissions to the market makers? Do you know where you're going wrong? Let's review last week before we get into the new data for this week. First, a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So last week, the market stayed contained between our pivot and our upper rotational zone for the week, with just a small peak above into the end of the week on Friday on the holiday. But if we dive a little deeper to see under the hood and see what happened on a daily basis, we can see Monday was a gap and trap day. And if you're still falling for these traps, it's okay, but it's time to level up your game and take off that blindfold. So we laid out these trades in the pre-market, and you could have gone long 60-12 up to 24 and 36. And then at that 36 to 40 is where we were looking for our resistance to come in, looking for the selling to come in. We were going into the market 10 feet tall and bulletproof. No insurance, no protection, no risk management. So when the market gaps, everyone had to start buying insurance with FOMC minutes, PCE, and GDP on deck. And we could see this at 8:30 in the morning that we were 113% underinsured for later in the week and 166% underinsured for that Monday. And by 10 a.m., we were fully insured. And that brought about the move that pushed the market down at the open. And we also knew this by looking at the positioning of the market makers. So we knew that 60-43 was going to be the top, and we knew that at 6:30 in the morning. If you aren't looking at the positioning of those market makers, then what is your edge? How are you going into this market to battle, to be fully prepared if you don't know when the other side is going to step in? It's we knew this at 6:30 in the morning on the 25th that 60-43 was our biggest level where the market was going to start seeing big supply introduced. And we knew that 59.77 to 82 was our last bid before things started to get a little dicey. And our low of the day that day was 59.83. So we missed it by, or I think it was 82, maybe missed it by a tick. And the high was right at our 60-43. Are you understanding where these things are going to come in, where the flows are going to start, or are you just one of the ducks that are quacking and letting them feed you? Try not to throw your money away this week. Let's keep going here for what's happened last week. So Tuesday, we were looking for a trending day. We didn't have any shorts planned until up at 60-52, and we trended up all day. Very clear that as we had the insurance needed ahead of the catalyst, that FOMC minutes weren't going to matter. A known event only matters if people ignore it, which leads us to Wednesday. PCE has been on the calendar for a while now, and it was rinse and repeat day. Basically, everybody was behaving like a teenager with a new car. They had no risk, no concerns, and no protection. And this tossed us back into the washing machine. So can you tell which of these two charts is Wednesday? Let's look first at why this happened. And if we look again at our insurance in the market, we were 50% underinsured pre-market and then fully insured by 10 a.m. on the 27th. And again, that's the same kind of panic buying of insurance that everybody's doing as they see the hurricane coming in and they realize they weren't prepared. And so now they're buying at a higher premium, and the insurance sales love it. So what they do is they drop the market, and on the left here was Wednesday, on the right is Monday, but you can see the same thing happen. We came into a known event came into the start of the week where there's known events without any protection, and came into Wednesday without any protection, and we trended down until the early afternoon, till right around 12 or 1 o'clock, and then the market rallied as then the insurance providers in the market lock in their profits. Same setup, twice in a week. Make sure that you are getting prepared for these flows and these kind of setups, because if you understand who's in the market and what they have to do to protect their capital or to initiate risk on their capital, then you can get ahead and front run a lot of these moves. So Friday, after we come out of the holiday, shortened trading session, a free ride day. And we just trended the market up. And if we look, we knew that 60, 15 to 20 was going to be our big bid at the bottom. 60, 65 was going to be our big area at the top. Again, where we would see big supply get introduced. And 60, 35 to 40 is the largest position of the market makers. And you can see that's all we did. We opened at our lower level, we pushed right up to where the supply was going to get introduced, and we came right back to the big pocket of Citadel, Susquehanna, and the rest of Chicago. So for the week ahead, we are looking for rotational price action between 59.81 quarter and 60.6375. Our pivot is 60.23 3/4. If we get over 60.63, we'll target 61.19. If we get under 59.81, we'll target 59.16. Don't forget to like and subscribe if you want more information on how to improve your market site. Have a great week and stay safe trading out there, everybody.